Good morning from the For the CME. This is Chris Robinson with your Traders Exclusive comment today, the 30th. One more business day left in 2014. Wanted to wish you all a happy and prosperous 2015. Pretty short and sweet today. Looking at the grains, we still have the funds long 250,000 contracts of corn, about 20 to 30,000 contracts of wheat, and about 25,000 contracts of soybeans. So they've made a very big long bet going into the January 12th USDA report. There are two big numbers during the year for grain marketing. This January number is very, very big. And then in March, April, we'll have a planting intentions number. Those two numbers can really move the grain markets. Because of that, you've got to be aware that the funds have made a big long bet. If they're right, they're going to run it even higher. However, if they're wrong, where are they going to go being long 250,000 contracts of corn if it turns out that we've got a bearish report? So that gives you opportunity. Secondly, look at what's happened in the wheat. The wheat really got pulled up by two things. First, by the meal squeeze, but then also with the worry that the Russians were going to stop exporting. It seems to me that the best wheat traders in the world are probably the guys in what's left of the Russian Politburo, because they got a great rally to sell into. We're 77 cents off that high just 7 days ago. So in the last 7 days, we've dropped 73 cents. That was a great kind of a smoke and mirrors rally. They are going to impose tariffs, but it's not till the first of the year. And it's really not going to impact anything that's already on the books. So it was a great opportunity for people to get short. Is that going to continue? Again, we'll move sharply off of that January 12th report. A big part of the wheat rally was a short covering rally. Whenever you have a decrease in open interest on a sharp rally, it tells you that it's not people getting long, it's people getting out of their shorts. So it's not a sign of a healthy rally. That being said, we're going to move on to the beans. Beans are in the middle of a dollar trading range, which has been played out over the past 2 months. We had a good short squeeze off of the meal issue 6-7 weeks ago. We had a good rally. Since then, we've been in this $1 trading range. There's one thing I wanted you to take a look at. There's something called technical analysis out there. If you're watching this, you're probably familiar with it. There are a couple trend lines to look at in March beans. The resistance trend line above goes at about a 45-degree angle. It goes back all the way about 6 months ago. It hits 3 points. And then there's a support trend line underneath. So they come together kind of a asymmetrical triangle. Take a look at that. Now, technical analysis is only good as the person that's actually trading off of it. If all you needed was technical analysis to make a lot of money, there wouldn't be any cab drivers in Chicago. So that's a caveat. But there's a couple trend lines people are looking at for March beans. The resistance is about $11 in March beans. There's support at around 10.20. That's an 80-cent window. Again, a lot of people make decisions off of trend lines like that, so you've got to be aware of it. If you're looking for a specific rec, I don't do that in this format. However, if you're looking to pick my brain and would like to talk with me further, you can reach me, online. That's really about it. Hope you guys have a good New Year's Eve, and we'll talk to you next year.